I'm curious. I don't have the data for this, but I'm just curious how many Ukrainians are getting Bitcoin wallets as we speak, because suppose they anticipate some sort of crisis in their home country, where they have a run on the banks, where they can't access capital, where maybe they're fleeing, they're on the run. Bitcoin is something that has helped refugees from Afghanistan, for example. We've seen precedents of this. So maybe you're right. Maybe this is helping the overall adoption rate. Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com, is back to talk about Bitcoin, the stock market, gold, geopolitical tensions, the Fed, and much more. Gareth, welcome back to Kitco. Welcome back to the show.
Thank you, David, for having me back. Always a pleasure.
Now, Gareth, we like watching your show and your interviews because a lot of people who are trading on the side or on their own time are watching you for advice on exactly what to do. Now, recently, I've started taking your advice to heart myself, and I'm not a trader. I'm not a professional trader like yourself, but I do have crypto holdings. And prior to, I would say, last month, mainly I just held my holdings in an account, in a wallet, and I didn't touch it. I just held it for long-term capital appreciation. At least that was my plan. Now, after speaking with you for a while, I started to change my plan a little bit. So I'll tell you what I'll do. I don't mind telling you. Post-January, when we had a big correction in Bitcoin, I started to trade half my account more actively. So what I did last week, for example, was I took the cash that I had in my account. I bought more on the dip at around $33,000 on Bitcoin, with the low 30,000s. And then as soon as it climbed back up to 41,000, I sold that position. And so basically half my account now is basically buying on the dip and then selling as soon as it reaches a certain percentage gain. For my case, it was about 20, 30%. And then I would just leave it there, wait for the next dip, and redo the process. How would you evaluate that strategy? Is that something you would recommend doing? Is that something you do yourself?
No, I think, first of all, I think even when we had the live broadcast with Lynn Alden, I talked about this level on crypto, the 33,000 level, and how it was a perfect parallel between the highs, connecting the highs here and the lows, and that was the buying opportunity. So again, that was awesome. You bought. That was the right move. Technically speaking, you took emotion out of it. People were scared at that point, but you stepped up and you did exactly what you should have done. Now, selling around 41,000, very smart to take half off the table. There's nothing wrong with taking, 25% off the table or so in terms of profits. And then you can always hold the rest in case Bitcoin does go higher. So that was a beautiful example of not being emotional, right? And that's what every trader needs to be. Every investor needs to be just focused on the facts, the logic, and the charts. So just looking at Bitcoin now, what the beautiful thing about it is we've had this big rally up. We broke out of this downsloping trend line, which probabilities dictated we should. And now you're asking, okay, well, why is Bitcoin stalling around 45 to 46,000? The answer is very simple here. Connect these lows, which happen to be a neckline of a head and shoulders, and look at the exact high on Bitcoin right into that pivot high. So that right there is telling you why Bitcoin's stalling here. Now, the question is do we break above it? If we break above it, you have a chance of going to about 52,000. I would say if you get up there, look to take profits on the remainder of it. That's what I'll be doing. But I did exactly what you did. I accumulated. I sold half around 44,000, and then I'm looking to sell the rest if it goes up. If it comes back down, I'll look to buy a dip into key support. But it's been a fun trade, and it excites me, David, to see you starting to be a little bit of a trader here.
Yeah, I'm not trying to be a trader. I'm just trying to not lose money. I think there's a very big difference. I'm not trying to be Gareth. I'm just trying to not lose money. Gareth, at $44,000, which is the current level that I'm looking at the chart today, what's next? I think that's the question on everybody's mind. Now I'm thinking, all right, I sold half my position at 41. Do I go in at this point because I'm not seeing any downside action since a couple of days ago, or do I just wait for a more pronounced breakout either way?
So the way a trader wants to trade is you never want to add back to your position at a worse level. What my philosophy is if I'm going to buy more, it has to majorly help my average. So for instance, if you bought in at 40,000 and then you bought in more at 33, your average is somewhere right in the middle right there. And that's helping your overall average. You never want to hurt your average, because if you're wrong and Bitcoin comes back in more, then very, very quickly you go into the red. So there's a couple scenarios here. Number one is we see that the chart here is dictating that we're likely again into resistance. Now, the question is, do we make a bull flag off of this, which would be kind of this type of pattern, a slow decline, and then break up to 52,000, or do we start heading back down? Now, I'll tell you this, David, based on everything I've looked at, based on the cycles, past cycles, based on all the metrics, the leverage in the system. And by the way, just to clarify, someone said this on Twitter today. They said, "Oh, there's not much leverage left in crypto." That's irrelevant. It's the leverage in the system. Look at the housing market. Look at the stock market. Look at how much leverage is in the debt markets. I mean, there's so much leverage that it doesn't matter if people are not taking 100-to-1 leverage in Bitcoin anymore. There's still leverage in the system. And ultimately, this is going to drive crypto down. Whether it goes to the top here and then starts selling off, or it goes to 52,000, you are going to see still a longer term target of sub 20,000 on Bitcoin. So I'm not going to tell you what to do, David. We all have to make our own decisions, right? But for me, I'm a trader until it gets down low enough where I feel confident that it's putting in a cycle bottom.
Okay. You don't have any idea as to when that $20,000 target is going to be met? I see you on other media now as well. You're making the same headlines, $20,000 Bitcoin. When's that happening, Gareth?
Yeah, so all I can do, right, is look back at past cycles. And basically, if you look at 2017, it took between 6 and 12 months from that high to put in the low. Now, remember, after it put in the low, 20,000 was approximately the high in 2017. It then bottomed out around 3,500, but then it stayed between 3,500 and 10,000 for a long period of time, another year or two. So again, my thought process is within a year of that high in November, we probably will see the low. But then again, investors need to understand that it'll probably go sideways for a while before it really starts to rip up. So again, just to be clear, over the next 6-12 months, downside for me, right? When you talk about in the next 5 years, the next 10 years, huge upside. This is the answer. Bitcoin to me is the one asset. And a lot of people talk about Ethereum and other ones. Those are all technologies, right? Bitcoin is the only crypto where people are saying, okay, I'm going to hold it as a safety play against gold or with gold, against the US dollar, against the government printing of assets, or all governments printing of assets. And that's really why I like Bitcoin most of all.
Gareth, I don't know. I'm looking at this chart, and I'm just going to challenge you on that point here.
Okay.
You know better, just to be clear. But I'm looking at this chart, and it just seems to me like this is the beginning of the same repeat that we saw in August. Look at that. Mm-hmm. Look at that chart pattern. Isn't that basically the exact same pattern? We had a huge downfall all the way from the top in April, troughing in late July. And then we climbed back up, had a little dip, and then ultimately we reached a peak, another peak in November, and now the same thing happened, right? We corrected down 50 odd percent, and it looks like we're in the early innings of another retrace back to its new all-time high. Well, I don't know if that's. Yeah.
First of all, that's extremely astute. Like that is, I have looked at that, right? So what I'm thinking is that this type of move up right here is very similar to this type of move up right here. And we know that off of this move, we then ended up going here and eventually breaking up and going to 69,000. So there's always a possibility of that, right? For me, I just don't look at charts and think that they're quite that easy. I still look at the kind of the 4-year cycle, right? So you still have that 4-year cycle, and Bitcoin, when it does have a cycle high every 4 years, it doesn't just bottom out that quickly and go back to new all-time highs as fast as it did here. So I'm looking at this as more of the cycle top, a beautiful M top pattern, and we're likely putting in an A pattern. And again, this is another technical pattern, but there's a pattern called an M, and then the A pattern, which can go a little bit higher, but ultimately the A pattern leads to further downside. So again, great analysis. And what you're talking about there is absolutely a chance that it does that. I just don't have it priced in terms of my calculations for that.
So is it too simplistic to say that in the near term, we're going to reach maybe 50,000 and then another correction from there?
I think that's a decent possibility. So, I mean, right now, 46,000 is a major resistance. That's kind of the neckline retrace of the head and shoulders pattern. If it can get through 46, then I think the midpoint, see this dotted line, which is the midpoint from the highs and the lows, then this would be your new target, which would be just around 52,000. And I think that would be your next major resistance level.
I've also kind of changed my own philosophy when it comes to holding cryptos. I used to just have well, I have a wallet and I hold everything there and I just keep it with the idea of just waiting a couple of years and eventually doing something about it afterward. But now I've tapered off that my holdings in the sense that I have something to hold for the long term, but also I'm trading the other half of it. So I have a portion that I'm not touching, but I also have a portion that I'm more, I wouldn't say actively, but more actively trading it. Like maybe when I do need to make a trade, like I did this past week, then I would execute in a swing trade. Is that something that you would recommend people do? Is that something that you do yourself? What portion of your total holdings would you allocate to just trading versus holding?
Wow, a portion of holdings. So that's a very good question because, based on people's different account sizes, that's going to be a tricky one. Because again, if you have a small account, it's hard to swing trade some and then day trade with the others or hodl for the others and so forth. So, but in general, I do what you're doing, and I think it's a very smart move. So for instance, I'm doing that with gold right now. I have core positions in gold. I have physical gold in my possession, right? And that's gold that I'm not, selling every other week or every other pop. But then I do invest in things like the GLD, the GDX, and those are positions where I swing trade. So multiple times this year already, and from December, I was in and out of GDX making great money on the pops, but then I'm still holding my core gold positions. With Bitcoin, that's exactly what I will do. At a certain point, it will be low enough to say, all right, I think it's near the cycle low. I'm not going to be able to tell you exactly to the penny where it's going to go, but sub 20,000, somewhere down there. And I'll buy a core position, probably 5% of my net worth, that'll tuck away, and then I'll still swing trade Bitcoin with the remainder. So I think that is such a good play for people because you can generate short-term income from those swing trades while you're still holding for that longer term mega move. And you can participate in both. So you can see, think about someone who hodled from the 69,000 level. They're hurting right now, but if they were swing trading along the way, they might be down on those coins, but they could have been making money either shorting it in the interim or going long, buying the dip, selling the rip, and doing it in that respect. And it can actually really be a nice, handle for your extra income.
Let me ask you this, because a lot of people do respect your trades precisely because you're unemotional. You just read the charts. When data changes, so does your thesis. At what point, now you've been calling $20,000 as your downside target for a while. In fact, the last time you were on the show, you had said that sub $20,000 is even possible at this point.
Yeah.
Let me ask you this, Gareth. At what point would you say to yourself, $20,000, let's suppose we don't reach 20,000. I'm not saying we won't, but let's suppose that the charts don't reach 20,000 anytime soon. At what point would you say to yourself, that's no longer a realistic downside target? I'm revising my downside target. Maybe at that point you turn bullish. What do the charts need to do to change your mind is basically my question.
So number one, we would have to go back up to the highs, right? So you get back to 69,000 and you take that out, then you have to say, okay, that needless to say, that wasn't a cycle of downward move. It must have been just an intra-cycle move, just like we saw from April into June and July and August. So I think that's number one, but there's more to it, right? So part of the thesis is the fact that the Fed is now dealing with inflation, right? So you have to look at that aspect, the fact that they're tightening monetary policy. And what that's doing is it's pulling money out of the system. So one of the big reasons in my book for why Bitcoin got as extended, as well as the stock market with crazy valuations. Look at AMC or GME and all these things, is because there was so much money flowing in. It was free money everywhere. It was like airdrops of money from, 767s or 777s, just all over the place. If the Fed is really pulling back on that money, then you have to assume that there's less money to go into cryptocurrencies, to go into stocks. And so for me, not only would I need to see the highs get taken out to know that the cycle is over, but I would also need to see a Federal Reserve that starts printing again. So let's say all of a sudden the economy starts to really weaken and we go into recession and, inflation, let's say, has come back to 4 or 5%. Maybe the Fed then starts printing lots of money again to get us out of a recession. Then I would say, okay, game on again. Risk assets are on the table. They can start to inflate again. Here goes Bitcoin along with tech stocks.
Perfect segue, Gareth. How likely is that scenario that you just described? We're speaking today, a day before the CPI data is supposed to come out tomorrow. What are you expecting inflation to be for the next reading, and how would the Fed respond?
Yeah, so for me, I'm expecting the CPI number to come in kind of right in line with expectations. We've seen the 10-year kind of bubble up against the 2% level, just shy of it. I think we do touch the 2% in the next week, but I'm not really looking for a CPI print that's going to freak the markets out tomorrow. I still think it's going to be generally in line. The markets are expecting a really bad number. Maybe it's even slightly better than the market anticipates. Now, going to the Federal Reserve, what I see, the game plan, the forecast, what I have is that the Fed is going to continue to tighten, tapering fully, raising rates by maybe March, April, May, somewhere in there. And then what they're going to see is the economy starting to slow more and more. By the second half of the year, I think they only get 2 rate hikes in 2022. Then they start backing off. And if I'm right with the crypto 1-year cycle to the low, you actually could see by late this year, the Bitcoin low being put in. And then actually the buying could start in terms of longer term. And again, the idea is there that the Fed would then start to have to react to a weaker economy by loosening monetary policy again.
Okay. Well, the markets might be pricing in inflation in line with your expectations. But you know what? Something else they're not pricing in is war in Eastern Europe. Because I'm reading headlines that came in yesterday from U.S. intelligence officials that said that Russia rather, is 70% ready, combat ready for an invasion of Ukraine. 70% of their hard assets that they need to move to the border have been moved, and they're almost ready. Markets obviously either don't care or think that's bullish news because we're up today, as we speak, 1% of the S&P 500. So what's your view on the tensions that are on paper escalating in Eastern Europe?
So I always look at the markets as being the best signal, and it's nothing against the intelligence services or the government, but oftentimes the government has gotten
just
it
to
wrong
be clear,
in the past.
they're not saying that Russia is going to invade. They're just saying that they're almost ready to invade. Yeah.
Yeah. So again, I look at it like the markets have that inside scoop because big money talks, big money knows, right? We know this about deals in the biotech sector. For some reason, you'll look at options just ahead of a big deal and you'll see some big buyers in there. Generally, big money knows. So right now, I take the market as the best indicator of what's going to happen. And right now, the market's not scared. So I'm not scared at this point. Now, if that shifts, that'll be something that we pay attention to. But certainly, I think that if you look at the downside, I again, to me, it has to be more of a kind of a calling the bluff of the West. I just don't see the upside for invading Ukraine. Look at it like almost like in Afghanistan for the U.S. forces. I mean, do they really want to get into a street warfare that could take literally years? I mean, and suck a lot of money out of the system. I don't know. So I'm not too scared about that. I do think that again, if it's going to happen, look for the 1 week period after the Olympics. That'll be when it's going to happen, if it's going to happen.
Well, just to play out the scenario, keep in mind now, Gareth, Ukraine is not part of NATO, at least not yet. Right. And so a direct attack on Ukraine does not obligate the U.S. and its allies to respond. Only a direct attack on NATO would trigger a direct military response. And so what you're talking about, that doesn't necessarily have to happen. Of course, the U.S. has to respond in some way because, like you said, on our last interview with Lin Alden on the panel, China is watching this very closely. So any signs of weakness from the U.S. would trigger some sort of escalation on the part of China in the South China Sea or in the East Pacific region as a whole.
Right.
So this is a larger geopolitical issue that we're talking about. In the case that Russia does decide to invade Ukraine, I'm not saying they will, but suppose they do. Analysts are saying 50,000 civilian deaths in Ukraine, a huge migration crisis out of the country into Europe. Basically, a very catastrophic crisis is going to ensue. What's the market going to do in that scenario?
I mean, if Russia invades in the short term, it will absolutely take a hit. You'll see fear and panic. You'll probably see the futures overnight dropping 200-300 points on the S&P. But I think that, again, what I look for is, okay, well, how does this impact the U.S. and the U.S. economy? And does the Fed then turn around and say, okay, well, now this is a new risk. Do we need to be a little bit more lenient in interest rates? And that could actually end up being a buying opportunity in the short term if you get a quick dip. into that phase, because again, anything that makes the Fed more nervous, likely to make them more easier on monetary policy. And then the market will respond, easy money, free money, let's go buy again. By the way, I'll just say one thing about Ukraine, and I can't help but feel bad because the US literally promised them security if they gave up all their nukes. And if they did still have nukes, then probably Russia wouldn't be messing around as much. So, I mean, it's kind of I feel bad. I feel bad for that situation. You know, it's rough.
Well, what do you think is the likely U.S. response, just hypothetically?
Yeah, so definitely not militarily. The U.S. has had enough of that with the wars we've been in. So you're looking at more sanctions. There has been talk that the U.S. can do certain things with rates and currencies that would be very impactful to Russia. So I would guess that it would go that route. I think cyber attacks from the U.S. would be absolutely something that would be employed. I think this is the whole new phase of war going into the future, where it's done through sanctions, through FX type stuff, so Forex and currencies, and then also through cyber attacks.
Would this have any impact on Bitcoin?
I think it would. I actually think it would be a short-term positive for Bitcoin. It's one more reason why you have to be careful.
A Russian invasion of Ukraine is positive for Bitcoin?
Well, I do think I think it means it pushes more people to say, okay, think about someone in Ukraine or someone in Russia, or the uncertainty that breeds with their currencies and the potential reactions or implications from the global powers to affect and maybe cause the ruble to crash or cause the Ukrainian currency to crash. I mean, those type of things definitely are good for gold, but also for Bitcoin. Now, again, do I think it's going to be a long lasting thing? We'll have to see. But definitely, I think that would be a short term positive for Bitcoin.
I'm curious. I don't have the data for this, but I'm just curious how many Ukrainians are getting Bitcoin wallets as we speak. Because suppose they anticipate some sort of crisis in their home country, where they have a run on the banks, where they can't access capital, where maybe they're fleeing, they're on the run. Bitcoin is something that has helped refugees from Afghanistan, for example. We've seen precedents of this. So maybe you're right. Maybe this is helping the overall adoption rate. Now, just going back to Bitcoin one more time, and we'll end it on gold. Do you see a scenario in which Bitcoin could end at $100,000 this year? I've gotten that reading from several Bitcoin analysts I've spoken to and commentators. Just want to get your take because you're a trader.
Yeah, I mean, right now I don't see that as a possibility. I really don't. I wish I did, because I know there's a lot of people that are just holding, and unfortunately, a lot of people got in the 60,000 range. If you look at the average investor, a lot of them kind of bought into that hype when it was trading 60 to 65,000. But right now, I mean, the charts are definitely broken. Positive was this short-term breakout, but again, the probabilities, and I'm a trader, right? So everything I do is probability based. When you have this downsloping trend line right here, and then this trend line right here, the probabilities dictated a breakout here. But what also happens in more cases than not is you go back and retest that downsloping trend line. So the problem is this downsloping trend line is so fast, it's downsloping so quickly that in a couple months, it'll be in the mid 20s. And outside of even 2 or 3, 4 months, it could be below 20,000 on that retrace. So, I don't see it. It doesn't mean I'm right, of course. I've been wrong before, but I certainly am not expecting 100,000 this year.
Okay. All right. Fair enough. Well, you are expecting gold to outperform Bitcoin. So let's finish this segment on gold. Gold's done pretty well this year compared to cryptocurrencies. I'm talking about the first few weeks of 2022. Is it still doing well chart-wise?
Chart-wise, it's absolutely beautiful. The consolidation phase continues right here. It's stuck between this wedge pattern. I still am in the camp that it's going to break out. The more times you hit on a trend line, and you can see how many times we've hit on this trend line here, 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 and here, this is a weakening trend line. So what I do think it does, I don't know if it breaks out right away when it goes into it, but if we hit it again, I think you maybe get a small check back, and then the breakout can come, which will enable this to go possibly back to 2075, which was the high from 2020. Ultimately, I think this is just the beginning of a bigger breakout, and I really want to show this chart.
That yellow line was just hilarious. It was like I know that's not the right scale in terms of the timeline, but you just drew a straight vertical line upwards.
Yeah.
Let's clarify. You don't mean gold's going to vertically shoot upwards tomorrow?
No,
right?
no. And well, listen, maybe if Russia invades Ukraine, it'll do that, but that's maybe the one scenario where it does. But needless to say, charts don't go straight up, charts don't go straight down. But ultimately, when it breaks out, you would then anticipate a quicker, move to the upside to that high, right? But let me show you this, right? So I've been analyzing, and I've talked about this with you before. You have the move from 2018, right, where it went from basically 1170 all the way up to about 2075. It took 2 years to go up that high. We've now been consolidating for closing in on 2 years, right? So upwards 2 years, pullback, consolidation for 2 years. This pattern played out perfectly in the 1970s. I'm going to show it to you guys right here. Bear with me as I do that. Let me go to the chart here. Let me see if I can get it up. All right, so here, check this out. So this is 1973, right here, 1973. You got the same move up that you saw from 2018 to 2020. From 2020 to where we are in 2022, and this occurred from 75 to 77. And then look at what happened to gold after that. And the reason I bring this to your attention is because this pattern is replicating currently, and same time frames, 2 years before the bigger breakout. And then it also replicates the inflation numbers that we're seeing now. So if that continues to play out, you could be on the verge of a mega spike in gold. Now, I'm not going to go out and say, gold was $100 here and went to 900. I don't think we're going up that many hundreds of percents. But is it possible for gold in the next 2 years after it breaks out to hit 5,000 or 4,000? Heck yeah, it is. I mean, that would barely be more than, just a little over a couple hundred, 100% and change. So I think people have to keep an eye on history. History is a great indicator of the probable outcome in the future.
All right. Excellent point. And I just want to point out that last year I was speaking to gold analysts. I don't think it was you, but other gold analysts I've had on the show. And I asked them this question. I asked them, look, gold has seen periods of stagnation for many, many years. Case in point, after 2011, we had, back then it wasn't called a gold winter, but if we can make the same parallel as crypto winter, it was a gold winter in the sense that gold had the price stagnated for several years between 2012 and 2018 until it eventually rose back up like the chart said. And I asked them whether or not the rise to the highs in 2020 could be followed by the exact same pattern. Most everybody I've talked to said no, it's either going to keep rising where we're going to have a brief period of consolidation until it hits new all-time highs. Well, it's been 2 years now, Gareth, and so far I've been right. So
just one little point to kind of differentiate that. So if you go back from even 2000 to where we are now in 2000 and up till about 2018, 2019, 2020, inflation was always 2% or under, right? Or basically. True. You now have that one difference. And that's why I draw a parallel to the 70s, the mid 70s to mid 80s, is because if you look back, that's more like the period we're experiencing now with high inflation.
Right. So how long can this consolidation last? How much longer can we wait before gold hits a new all-time high is basically my question.
Yeah, so if you look at the 70s, right, and again, we kind of topped out on that move up in 75, and it was just basically you started to move up in late 76 into 77, so it was about a 2-year consolidation. So if we go back to the current gold chart here, let me do that now. The idea is that we topped out in August of 2020, so if you're expecting it to follow suit, it would be right around August of 2022, maybe just before that, where the big breakout above 2075 would occur.
All right, excellent. So do you still think gold is going to be the top performing asset, at least compared to cryptocurrencies this year?
I do, and to the stock market as well. I still am in the camp that gold is the best performer. By the way, it doesn't mean gold's going to be up 50%. I just think that Bitcoin and the stock market will probably be flat to negative, at least for the year.
All right, excellent. Well, we'll follow up on that and much more later when we have you back on. Thank you very much, Gareth.
Hey, thank you, David. Have a great one.
You too, and thank you for watching Kitco News. I'm David Lin. Stay tuned for more, and don't forget to subscribe to our YouTube channel.